All right, guys. Well, it is noon. Today is, what's today? Tuesday, the 18th of July. Happy summer. I know we got a lot of people traveling right now. Uh, Rocky and I just wanted to come on and do kind of a review of the past week or so and talk about the trades that we've been taking. I know Rocky's been just nailing this market action and sending alerts. How many of you guys have made some money over the past few days? Just type a number one in the room if you've made some money either on the short or the bounce or hell yeah. Awesome. Awesome. That makes me happy. Rocky, have you made any money?
I was the heaviest hedged into USD that I've ever been in my trading career, and I bought it all back, all in Bitcoin. So yes, I'm very happy.
Nice. Well, it's definitely, if nothing else, guys, and again, I'll say this for anybody that's like brand new or just starting to learn the basics, like this is a great market to learn in. When the market starts to get really volatile and we have these like temporary panics and big rebounds, it's great market experience no matter if you're trading actively with big size or small size or whatever. Like this is just a good time to be in crypto. So, all right, so let's just kind of do a recap. I want to start by looking at the daily chart. And if you take a look at kind of just let's talk about broad market conditions because, as we talked about in last week's class, I just want to kind of go through the market cycle flow that we've been talking about. So like we've obviously since late March, early April, that was the start of a bull run from about $1,000 to $3,000. So absolutely unprecedented gains. And this is where, Bitcoin has, in my opinion, kind of gone mainstream now. Internet marketers from around the world are coming out of the woodwork, all of a sudden cryptocurrency experts. Like it's mind-boggling, which I think is both good and bad. You have new money that's being attracted and buying at all-time highs, but it's finally... we've been talking about this since like 2014, that eventually we were going to get to this inflection point where the mass majority of people start to hear about it. And, you'll hear about crypto in barbershops and grocery stores and the gym, right? Like that's when things start to kind of go full tilt. And I think that's where we are. And now even a lot of like the financial publishing newsletters are starting to put out like cryptocurrency newsletters and stuff. Granted, they're like 3 or 4 years late, but that just tells me that even the traditional stock trader guys are, really starting to get behind crypto. So, what's happened over the past week is we were consolidating and then we finally broke down and then rebounded. And one thing that I want to just kind of talk about is like, let's just start with the current market and why the market's done what it's done. Anytime you have a massive run where a market literally goes up 300% in a couple of months, that is not sustainable. Right? The markets don't just go straight up and stay straight up. Like there's a reason why it runs and retraces and panics and, all the typical market behavior that we talk about. But if we take a look at a fib retracement and just measure this run, you can see what's happened. We've done basically a 50% pullback to retest prior support. So, through here, not only is 2,000 just a really big kind of round number that the market tends to gravitate to, but it was prior resistance, turned support, right? And now we've panicked and then bounced off of that support, right? So we talk about our sweet spot a lot, and typically after you get a big run up, the market will pull back in between the 38% to the 61%. That's our what we call our Fibonacci sweet spot. Okay, so just kind of looking at what's happened over the past week is, we were consolidating, and then on Friday we started talking about the potential to break 2,200 and look for a short down to the next major level, which was in between 18 and 1900. So we actually anticipated this 2.5 or 3 day sell-off. And if you take a look at this chart, this is what, whenever I was on the microphone on Friday, okay, so this was, when did I take this? This must have been the Friday noon update or somewhere around that time. I said, 2200 is a major daily support zone. If it snaps, basically if we break below it, I could see a 20% or more sell-off in the next 1 to 3 days. My God, Rocky, did we nail that or what?
Yeah,
Jeez,
absolutely.
man. And then I went into some more detail. Like you had like GDAX and some exchanges and whales that were playing games at that level. They were trying to hold up that price. But so what I was saying is there was two potentials here. We were either going to V bottom off of this area, or if we got a 1, 2, 3, 4 breakdown pattern right here, that would have been a great, risk to reward short area, right? So I said, I'm watching this area closely, not going to trade big size due to like uncertainty with exchanges, the SegWit fork issue, and also big volatility, right? The bigger the volatility is, meaning the bigger the average daily range, typically the smaller the size, position size that you want to trade, just because there's more inherent risk when you have bigger volatility, right? So I said, if 2200 turns into resistance intraday, right? If we pull back and use that as resistance, and holds a lower high, we'll likely scale into a short, not go all in, blah, 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 right? Stay safe, stay conservative, don't swing for the fences with size right now. So if you look, I marked up these red arrows just to show you the potentials, right? So basically I said, I'm not going to just short the breakdown because it could V, but if we pull back and turn 2220 or 2200 into resistance, that would be the kind of the trigger for that sell-off. And so here's what actually happened after that. So you can see we pulled down, pulled back to use 2200, and then gave the 1, 2, 3, 4 intraday breakdown. So you were looking at about a 5-to-1 risk to reward from that zone. And then you can see there's just, kind of a steady downtrend. So, I was kind of skeptical of the bottom just because we really didn't see like a massive washout. And again, this is why like long term I was saying I took a lot of profit, but that just shows you kind of that intraday breakdown, what that looks like, and how that second bearish scenario is actually the one that played out, right? And then again, if you look on kind of the daily at what that looks like, so there was the 2200 level, and then once we snapped that, you can see that's where the panic came in, and then we got another day of follow through before capitulating and reversing. And then the reversal pattern kind of played out like this. We had that big kind of inverse head and shoulders, and then we've gone on to make a measured move since then. But that was basically, guys, just the thought process behind the sell-off, and exactly how we started with the broad market conditions, and then B, went down intraday, right? Looked for that breakdown pattern and had the areas marked up. And hopefully you guys, even if you're new to this, hopefully you can see how, and we talked about this on Friday, how you should think like a chess player, right? Like try to think of all the potential moves the market could play. And then based on that, if you see something that's clear, you have a plan beforehand. You're not going like, oh, wait, should I short? Should I buy? Like, before the market does something, what you're expecting. And if it does it and you are mentally ready and you're technically ready, meaning like you're in front of your computer, then you can take those trades. Does that make sense, guys? Everybody understand the thought process behind that breakdown? And do you see, the reason from the broad market, intraday, risk to reward, all that good stuff? Awesome. And Rocky, do you have anything you want to add on that one?
I completely agree with everything you just said, Chris.
All right. Cool. Again, guys, I think this scenario is just so good for learning because it it was pretty close to perfect the way that it played out. And then, so Rocky, I wanted to give you a chance to kind of like go through your trades.
Sure.
And just so that was kind of like we zoomed into that short. Now let's zoom back out. And Rocky, I know you just put this together with kind of like your thoughts over the past month or so. So I'll let go ahead and walk us through this.
All right. So it all started with a market report. I believe the date was, let me just see, it was around the 27th, 28th, that period, where I reduced all my altcoins by about 80% on the bounce, the first sign of weakness. And I mean like across the board, except for like a handful of ones that I was still holding. The reason for that is because I was watching, I put Crypto Compare / portfolio and all my trades in. And with that, what's interesting is you can watch your entire portfolio balance rise and fall. You can watch it grow. So I was treating my portfolio like a whole organic unit instead of just, because I was very, very well diversified in many, many altcoins, right? In fact, I'd say like 50% of my portfolio was in altcoins because we'd had just such amazing runs. And it didn't initially like start that way, but as they grew in value, it basically took up space in my portfolio. So as a result, I was able to kind of look at my entire portfolio as one whole organism. And we had a major crash, and altcoins bled hard. They all crashed by about 30%. And then we had a bounce, and the bounce was pretty much like a double top, but a lower high, right? And in the report, I saw this as a first sign of weakness for the entire markets. And I said, I'm reducing all my positions across the board with limit orders and waiting for the bounce, right? So I'll have them sell into strength and wait for the bounce. So that was me reducing the position. Now I didn't know with absolute certainty that everything would just crash from that point. When you're on the bleeding edge, everything's always about possibilities and probabilities. But when I saw that and then I saw the bounce and I could reduce positions into strength, I asked myself, am I comfortable with 50% of my entire crypto portfolio being in altcoins, given how volatile they are and how we look to be hitting a distribution cycle? And the answer was no, I don't feel comfortable in that whatsoever, right? So then the next step was there was a bit of a fake out on the descending breakout trend line. So there's a little bit of a chop. I didn't mark it on the chart, but I went into Bitcoin for a breakout trade. But I immediately exited upon the first sign of weakness, right? It was pretty clear to me that we were having a failed breakout. So I went back into USD on my hedge. Then I was just kind of patient. Altcoins bled really, really hard. I mean, most markets were down like 60, 70%, very, very deep in the red. I saw a lot of altcoins were hitting like that 78% retracement zone. So I took my cash hedge, I went YOLO, and I flipped it all into altcoins. I went altcoin shopping, sent out a trade alert, and I basically said, go nuts, go shopping, pick your favorite flavor of altcoin, find the ones that are the biggest, bloodiest, nastiest candles and go coin shopping for a bounce, right? So that's what I did. I flipped all my USD into cheap altcoins. 2 days later, everything went green, bounced really hard. We saw bounces anywhere from like 20 to 40%. I'd say my average on those bounces was probably around 20% across the board. And then I sold into strength. I saw that the reason why I sold into strength is because I saw a classic, prior support trend line turning into resistance. I saw everything was green. I saw that we're butting into resistance. And I wasn't going to sit around and wait for everything to go red again before locking in profit, because then I would miss the opportunity, right? And probably end up having to cut out at break evens. So I basically hedged fully into cash. Right at that point, right? I even stuff that I had on cold storage, I went, I liquidated everything. I was up till 3 a.m. just liquidating stuff into strength. And I even tweeted about it too, right? I was like, all right, I'm going right back into cash. It was my biggest cash hedge that I'd ever done in my entire crypto trading career.
Rocky, that was right here where you said sold everything into strength.
Yeah, that was right there.
So okay, so just to recap, so basically, back here, I think it was like the third or fourth week in June is when altcoins really started to let go, right? And then they kind of bounce back, and on that bounce, you were just like, okay, let me try to scale out, maybe gracefully start to move out of these markets before the massive panic.
Yeah, absolutely.
Okay. And then and then you like probed like some longs here on Bitcoin just in case it wanted to hold up and break out.
Yeah, I did. I did a preemptive long right before we broke out of that descending trend line. I thought there was a possibility of a recovery there since we're still making higher lows.
Yeah.
And it looked like we were breaking out of essentially a symmetrical triangle.
Yeah, because you had this trend line there too that we kind of broke. So it was looking bullish, but because we were mid-range, like I liked that you as soon as it rolled over, you were like, nope, I'm out.
Yeah. So anytime I'll catch like a descending trend line breakout, that's kind of mid-range. I'll definitely watch it like a hawk. And as long as it's making higher lows along a bull channel or trend line, then I'll hold it. But as soon as it starts to roll over, I just cut it.
Yeah.
And I didn't want to take any chances, and I cut it. And I was ruthless. I sent out a trade alert on that pretty much right as it was breaking down. So it was like close to the 2,500 mark.
Yeah, and so one lesson that I get from that, guys, that I think is really important is like you kind of have to know when you're in a trade that you want to give room versus when you're in a trade that if it starts to show weakness, you want to just take a graceful exit. Right. So like if we were on the front side of the trend and there was a ton of strength, that would be one that I would say, okay, maybe you want to give it a little bit more room or be more patient with it. But when you're on kind of the back side of the trend after we've peaked out and you're mid range and things are just very slow and choppy, like that's probably a better time to say, okay, as soon as you see signs of weakness, go ahead and knock it out. Right.
Yeah. Absolutely. And it was getting really kind of choppy in that range. So at that point, once I had hedged, I sent out an alert and I based our market report, and I just said, listen, we're in the quiet before the storm, guys. Just be patient. Anyone who's new, things are really choppy right now. So we need to under trade, sit on our hands, and have some perseverance, because this is the quiet before the storm, and we're probably going to see some major volatility. So just be patient, get ready. Mm-hmm. And so essentially, so we had that bounce play. I sold into strength. Then everything just kind of dumped. I got really excited as everything was dumping, because I knew eventually we'd hit a bottom and get a nice bounce play.
Yep.
Then after about 4 days of blood, which is generally an anomaly. So I jumped the gun a little bit too early on my bounce play. Mm-hmm. And that was a mistake for one reason. The reason being is because the daily candle closed without a wick. And I was waiting all day for a further breakdown to snap in on a bounce play. So if you go on the 1D, it didn't have a wick on at the bottom of that. So anyways, I flipped all my Bitcoin back into or all my USD back into Bitcoin. And the reasoning for that, partially impatience, because I was hungry for a dip, but also because everyone was expecting really, really low prices, right?
Mm-hmm. Yeah.
So I woke up the next morning and I saw that I was in the red, by a few $100s. So basically, I cried myself to sleep. I laughed. I came in the room to give everyone a pep talk, and I laughed, and I told everybody to laugh in the face of chaos and to observe their emotions, to learn from their emotions right now, and if they're scared, then to learn from that fear and to realize that the opportunity generally lies when the markets are the scariest and the most bloodiest. So I wasn't concerned, and the reason why I wasn't concerned, and I had some lower fib level possible targets, like, possibility of 1,700, even I entertained the possibility of like, the 1,300 area, right? Because that would be like a prior resistance turn support type of thing. But here's the thing, I also gauge on market sentiment too, and I wasn't concerned because even though I had gone all in on Bitcoin, I was still satisfied with the trade because I had bought in $500 cheaper plus an additional 20% from the altcoin bounce. So I had followed my cardinal rule of, buy low, sell high. So I was satisfied with that. And it wasn't the first, bloody Bitcoin storm that I'd weathered holding Bitcoin. In fact, usually for pretty much all of the Bitcoin dumps of, last year and all of last year, I've held Bitcoin and weathered all those dumps and just traded, right?
Yep.
So the reason why I felt comfortable with that, because I knew with a bunch of Bitcoin sitting on multiple trading accounts, that if we ever hit those lower target levels, I could pull the trigger on a margin long. So I could still hedge my position and still make money even if I jumped the gun a little sooner. So I was watching very, very closely. I wasn't going to just burn up my ammo and jump the gun and try to pick a bottom. I want to keep that ammo. So I was patiently waiting. And as soon as I saw that we were breaking out of the bear channel, we had this immediate bear channel down. As soon as I saw that, we broke out, and then we retraced and tested the descending trend line back into prior resistance support. I pulled the trigger on a margin long. I tweeted about it. I let people in the room know. So we had that double bottom right there with a higher low and a breakout of the trend line. That's when I knew to pull the trigger, and I added to my position. And then the V bottom bounce has just been absolutely beautiful.
So you started in over here around 2000, and then as it broke up over there after the double bottom, you added.
Yeah, it was the second bounce of 2000. I didn't add on the first one, but it was the second one where I retested support and started to bounce. That's when I pulled the trigger. It was like just under 2000. And then it rolled over. But you got to look at those daily candles too, and anytime I see daily candles with nice wicks after a big sell-off, it generally means that at least a local bottom is in, right?
Yeah.
And in this case, I jumped the gun a little too soon, and I kind of knew it because there was no wick on that daily, so that's usually a sign of continuation.
Yep.
That said, it was still low enough, and I still got the dip I was looking for. And very, very satisfied with this Bitcoin play. And so on top of that, interesting thing is how all of a sudden, miners such as Bitmain and Antpool, and Jihan's being against segregated witness, they all started signaling for segregated witness. So that might actually get locked in and confirmed. And if that happens, it means we're not going to get a network split on August 1st. And so I actually see, because we've been in the backside of the trend here for several months, you see all this red, backside. I also lined this up, this bounce play with looking at fresh recharged momentum on the momentum indicator, stochastic RSI. We basically crossed under on the 3-day, the 1-day, the 12-hour, the 6-hour, and the 1 week hasn't crossed yet, but it's getting down into the lower levels, right? So, anytime I see multiple days of sell-off, we had 2 days of sell-off retrace, 3 days of sell-off retrace, 4 days of sell-off, which is an anomaly, I'd like to point out, because it usually only happens, after 3 you get the bounce.
Yep.
So 4 was the anomaly. I saw that. I saw the structural support. I saw all market sentiment. Everybody's on Twitter like, I'm in cash, waiting to buy, 1,600, 1,300. Everyone wants cheap coins. I'm like, man, for a market that's supposed to be really bearish, everybody's really eager to buy some Bitcoin. I'm like, well, sorry, guys, that's not how the market works. If everyone's sitting on cash eager to buy, that means that we're going to likely get some real nice momentum if we do get a bounce, and people will start to buy in at higher prices on confirmation.
And that's exactly what's happened in the stock market for the past 7 or 8 years is like, you have all these pundits that are like, perma bears and like doom and gloom economists, if you want to call them that. A lot of them have newsletters, and all they talk about is how the government debt and all this, which is true. However, whenever you have a market that's bullish and every panic just gets bought up, what that does is it creates a network effect of buying. It's like buying begets more buying, right? And then before you know it, it's like, oh my God, we're in a decade-long bull trend.
Yeah, absolutely. And so the next level of interest right now is that 2400 area that you have. I know there's probably a lot of traders sitting on the sidelines waiting for the breakout. So we could
Yep.
get like a stop hunt, a short squeeze, breakout momentum play at that level. I wouldn't be surprised, obviously, to hit some resistance and maybe create like a little bit of an inverse head and shoulders.
Yep.
Yeah, it seems like we're pulling back again. So, it's oftentimes, obviously, the markets don't go straight up and straight down. So in this case, my plan, and especially if the fundamentals line up with Segue and it turns out that we're not going to split, I wouldn't be surprised to see a nice V-bottom breakout, a fresh recharge on bullish momentum, relief rally, really, because honestly, all this block size FUD has been hitting the brakes on an otherwise extremely bullish market. I mean, look what Bitcoin has already managed to accomplish with like the worst fundamental fear, uncertainty, and doubt we've ever seen in its history. This isn't like just some exchange getting hacked. This is like threat of network split and an all-out blockchain civil war, right?
Yep.
So for Bitcoin to get at these higher prices with 2 years of FUD, if you look at a logarithmic scale, we haven't even deviated that far from the trend line, not like in 2013. So I would say that we haven't, like, altcoins have definitely hit a bubble phase for sure. But I would say that Bitcoin hasn't really hit full throttle bubble stage yet because of not deviating too far from the logarithmic scale trend line. And for anybody who doesn't know what a logarithmic scale chart is, it basically just bases its lines and higher lows based on percentage gains. Right. So, for example, in 2013, it deviated so far, it went up so high because it literally went from $10 to like $13 in that year. Right. But then it came all the way back down and touched the ascending trend line in 2015. And we've just been hugging that trend line perfectly in this entire trend. We've just started deviating since we broke the all-time high, but not by much.
Yeah. Yeah. Awesome points, man. So a couple of things that I just want to kind of like make sure everybody understands, just based on what we've talked about so far is like, I'm always thinking about like the mental side of this, right? So like Rocky said, to be able to buy through here, like think about this. If this was the live market on this red day, like you have to have confidence in what you're doing to be able to buy against red days, right? Because this is like, I've actually been taking snapshots of people like on social media and stuff, like laughing at Bitcoin when it crashed. And let me ask you guys, like completely honestly, how many of you guys on these red days were freaking out a little bit? If you felt any fear, if you felt any uncertainty, just say yes. If you had, or if you were like, oh my God, is this the end? Even if it's a little bit, like just kind of. So I'm seeing some yeses, some nos, like, probably mostly yeses. Like you. Think back. What, Rocky?
The veterans know the drill.
Yeah.
We've caught so many bloody markets that they're all battle scarred and hungry for blood now.
Yeah. So hopefully for those of you that have been in the community for more than a couple of weeks, you know that like we've been preparing everybody for this. So there shouldn't have been any surprise, but like it's human nature to feel fear when the markets panic, right? Like, but what will separate you from the masses and put you on the right side of the trade is when you recognize it and you understand it and you know how to properly respond to it, right? That's when you do really well. So I know a lot of people were actually short through here, but longer term, like I whenever I see Bitcoin pulling back, I have to do mental checks with myself and go, okay, we expected this. Like, is there anything unexpected that's happening? No. Okay, then it's normal. It's a normal pullback and we're going to get to laugh at all of the trolls later, right? Like that's kind of my mentality. And I tend to like, what helps me focus is looking at the major price areas. So, even before the breakdown, I had this area marked up and we ran some extensions, right? So like if we run a fib extension to the downside from the high, you'll notice that, some of the profit targets, and it doesn't line up perfectly, but if we look at major areas from that first panic and bounce, the 100% was down there in between the 1900, and that's also where that prior resistance turn support was. So that to me is open air, right? And that's why the markets tend to gravitate to major areas. And that's why I do a lot of my position sizing around those major areas. So like Rocky was saying, he started in a little bit early, right, and took some heat, but he knew once that area was holding, he added to it. And that is the second lesson. So in addition to mentally being prepared and being able to hold through, those types of moves, if you are going to buy the bounce plays, it's a really, really good idea to manage your risk through position sizing, because a lot of times you won't pick the exact bottom. Like, think about that. Unless you're like really lucky, on most bounce plays, you're going to take a little bit of heat, or unless you wait for extra confirmation. So I'll show you like what I saw on the bounce. It was like if even if you want to wait for a little bit of confirmation, and like, so this is where Rocky was scaling in and then he added over here. Like, if you're a little bit later to the game, but you wait for a reversal pattern at a major area, that's where you can actually take less heat on the trade. So that's why I took this here. I'm like, oh man, if we snap 2100, we're probably going to go for a measured move of the head to the neckline, which is also going to bring us back to equilibrium somewhere, around the mid 2300s. And that's kind of what the market's done since then. It's basically V bottomed and done a measured move back to resistance. So, the volatility in the market movement right now is actually really nice. Does that make sense, guys, though? Do you understand like the idea behind scaling in and managing risk through position sizing, and do you see how that kind of played out here? Any questions, comments? I just think that is such a good example, because again, you never know where it's going to be, but if you mark up the area, right, even if it's like $100 area, right, like right now, that's a big area, but you can see it took some time for the market to work through it, but eventually it started to develop, and then there's your follow through, right? Yeah, it did. So it's just like chess, right? Like first you have to learn the rules, then you have to practice, and then once you got it down, then you'll be able to execute it effortlessly. But yeah, awesome. Rocky, any other comments on the bounce play? Anything you saw or that you think was a good lesson there?
I think for me, I think bounce plays for people to get comfortable. I mean, experience is the greatest teacher, and if you're completely new, like bounce plays are personally my best one trick pony. I absolutely love them. The reason why I love them is because the markets tend to move really, really fast when you catch them, right? Mm-hmm. So there's not a lot of like sitting around waiting. I love that kind of action. I also get a thrill and a rush of running out into the fire when everyone's panicking and crapping their diapers. Like I don't know, it's turned into like a twisted thrill of mine. So I kind of, I don't know, I love doing that. It gives me a rush. So basically, like people need to practice, right? So if you're not comfortable with it, then I suggest just practice with small amounts. There's no need to go in all in and go YOLO and do things like I do. I've practiced doing this for many years. I've scalped bounces on the smallest time frames. I've swing trade bounces on the larger time frames. And for myself, I find that they tend to be the most predictable when you have deep washouts. I mean, like a slow, grindy bear channel or whatever, those aren't really very good for dip buying. But anytime you get those deep red candles on the 1 day, I mean, those are just a beauty, because it's just counterforce, right? It's laws of motion, inertia, momentum, counterforce. So I like those counterforce plays. But yeah, just practice to build up confidence. You don't have to like have a fear of missing out or anything like that. If you feel too emotionally wrecked, by taking the trade or pulling the trigger at those levels, then chances are you haven't built up your conditioned your mind and emotions to be able to handle the size of trade that you're taking. So if you start off small, almost like strength training or martial arts or conditioning, you start off small and you slowly build your way up. And the more you build your way up, the more confidence you get, because experience is the best teacher, and knowledge only comes from experience, right? You can't really gain this knowledge. You can listen to us theoretically, but unless you're in the fires yourself, experiencing it for yourself and witnessing it and feeling it and observing your emotions and retraining and reprogramming your brain to be a contrarian, because our brains are hardwired for survival. I mean, you see a snowy blizzard outside, you don't think, I'm gonna go run out my bathing suit, right? You see like fire and blood in the markets, your mind all of a sudden thinks like, panic, sell, everything's falling apart. So you got to like condition your mind to actually do the opposite. And the best way to do that is to actually see the dark comedy in the markets, the humor in the markets, and laugh in the face of chaos. That's what I find is the best conditioning to get the courage to pull the trigger.
That's well said, man. And if you just go back over years and years and years worth of Bitcoin price action, you can see most of the time when things look the absolute ugliest is usually the capitulation point, meaning that's where things are going to bounce the hardest. So obviously sometimes the bottom falls out and goes much deeper than we expect. Sometimes it bounces quicker than we expect. But if you just begin with that mindset, like Rocky was saying, it's at least going to put you on the right side of the market, and then you can finesse timing and entries and stuff like that. So let's see. I know we've had some questions coming in. If you only had 2 or 3 hours a day to trade, how would that change your strategy? Well, Anthony, I mean, I don't trade for 2 to 3 hours a day. And I don't think on average Rocky is actively trading for that many hours. It's
No.
it's about being prepared, right? So like most of what I do is waiting, so it's like and if you guys haven't watched the class that we did last week on the top trading lessons, like that is probably the most important class so far this year, just because we go A to Z from setups and routines and all that stuff. But, most of what we're doing is planning, right? It's kind of like being in the military. It's like, 90% of the time, military operators are spending their time planning and 10% executing, right? That's kind of what trading is too. It's researching, it's understanding what's happening, it's mapping out the probabilities and the possibilities. And then actually trading actually takes very little time. And in fact, most of the and that's why we actually do a lot of these market forecast reports, and we're on the mic so much, mostly Rocky, just because he wants to help you guys think like a chess player and map this stuff out ahead of time so you're not dependent on us. Because, the fact is sometimes we're out. Sometimes we're, it's a weekend or whatever. And so if we're not able to be on the mic or give you guys the buy alert or the sell alert whenever we do something right away, we at least want you guys to have fully understand our thought process and what the plan is, right? And so for me, I basically set alerts on my phone, and if I'm in front of my computer, I might have a chart up to the side, but I'm not sitting in front of my computer all day obsessing over a 5-minute or a 1-minute chart. Like you don't have to do that.
Yeah, absolutely. Like the biggest plays, you could ride for days or weeks or even sometimes months. I mean, on this bubble, I've been riding some markets just for months, like Ethereum Classic, for example. Yeah. And that's what I call, just riding trends on cruise control. But basically the times where I spend the most time, like the only time where I'm on like full alert and the markets have like 100% of my attention is specifically when Bitcoin dumps. Mm-hmm. I'll get a few scalps here and there on the smaller bounce plays, because there'll be multiple little bounce plays when you get really, really nice washouts, and so we had some nice scalping on the those major dumps that you marked up. We
Yep.
had some good scalping in the room. We did catch the bounces on all of those bounce plays as well. We pretty much nailed every single bounce play on this in this market, really.
Mm-hmm.
I mean, maybe not exact bottoms on some of them,
Mm-hmm.
but close enough. At least a good meat of the trade.
Yeah,
So
and sometimes you got to get run over to actually catch the bottom. Like I remember here on the first red day, I was kind of warning people like, hey guys, this is the first sell off. Usually you get some follow through. So we got that follow through. So this was a good learning lesson too. But yeah, man, if all you do is hone in when there's major breaks of key areas, you're going to, for the most part, catch the bigger trades.
Yeah, because the big sell-offs is when we get the most volatility and momentum. So, and altcoins could sell off and stuff, and I'm like, man, it's except for that really really huge bloody sell-off the other day. I mean, that a few weeks ago or whatever, that was kind of exciting for altcoins, and I went for the altcoins instead of Bitcoin because the bounces were way bigger since they'd hit full like 78% retracements. But for the most part, I mean, if Bitcoin's just trending bullish and having small retracements and stuff, I really don't pay too much attention to it. I expect that if I'm riding a trend, it's gonna have pullbacks and make higher lows along the way. It's only usually when the big sell-offs that I just drop everything and just pay attention, and just observe and wait patiently for the next major trade.
I'll give you guys case in point. So like this was end of May. So I was actually traveling this week. So I think the day before my flight, so just to give you guys like a practical example of like a slower trade. So like, we had this breakout trade in the room and I believe my entry was 1888. That number stands out. So it was either on this day or this day. And so scaled in and basically had my initial stop loss order like somewhere way down here, just in case of a catastrophe. But my mental stop was way closer and I had alerts below, like at or below this pivot low here. Right. And then basically I just had breakout alerts and pullback alerts on my phone. That way, if there was a big move, I got alerted to it. But I was in this trade for several days and then took profit in between like I think it was like 21 and 2200 somewhere here. This was just kind of an extra little like breakout trade in addition to the long that I already had. But that's how I managed it. Like I was zoned in the room on the mic whenever we were getting the breakout, showing you guys where I was getting in because I happened to be in front of my computer. And then over the next few days, I was in Florida and traveling. And so I had my laptop with me, but I wasn't sitting in front of my laptop for 8 or 10 hours a day. Most of the time I was just checking price on my phone and I had like orders waiting and stuff like that. So, no matter what your lifestyle is, like if I know some of you guys are working full time, some of you guys are like Rocky and you're like just as much as you can, you're like all about, being in front of crypto stuff. So really you have a lot of flexibility and it doesn't matter what your schedule is, you can make it work for you. All right, cool. So I know we expanded on that a lot. So let's try to get through some questions in the next 15 minutes, and then we'll try to keep this recording below an hour. Where do you think Bitcoin could pull back to prior to 24? Okay, Mike. Whenever we're done with all the other questions, Rocky, what we can do is just like some market forecast on current action. What do you think?
Sounds good. Sounds
Cool.
like a plan.
Awesome. All right. To do good alts to pick up. Yeah, we can talk about alts in a little bit. Ed trades a couple hours a day. Research takes a long time. Yeah. Research and preparation is probably the most time consuming stuff. Excuse me. Sorry. Chris, how many hours do you research? I'd say, I read and research probably 3 to 4 hours a day. And not all of that is exclusively crypto focused. Like sometimes I'm analyzing startups, ICOs, general stock market, economic stuff like that. I noticed that it takes time to move money from hardware wallets to exchanges. As a rule of thumb, so this is actually a good question, Ded. as a rule of thumb, how much do you keep on the exchanges and keep on hardware wallets? So my answer is I only keep the minimum amount on exchanges that I need to be in a position. I keep most of my stuff on hardware, and I agree. There is like, it can be up to like an hour or two to start moving stuff around, and like that actually does take some work, and it's because it's crypto, it's a lot more work than say just having like one stock brokerage account, right? But that's why, like, if I think a trade is coming up, I'll position in and like move money on an exchange, and then if it doesn't trigger or whatever in a day or two, I'll move it back off. Rocky, do you have any other ways that you kind of manage around that?
For managing risk.
Well, like moving money, from hardware wallets to exchanges, and how much you keep on exchanges versus wallets. And
yeah, generally, like for most of last year and the beginning of this year, I've usually kept about 70% of my money on a hardware wallet, and I'd use 30% of my trading capital split up amongst about 6 exchanges to diversify my counterparty risk. So if one gets hacked, then my trading capital's not out of the game. Mm-hmm. Although recently, because of potential bearishness as the markets were starting to break down, I actually had flipped that ratio, and I had about 30% on cold storage and 70% on the exchanges hedged into USD, because there's still not really any good offline hedging options, until maybe we have some solutions like X8 currency or whatever. So in this particular instance, this is the most money I've ever kept on exchanges and the most hedged I've ever been to USD, just because, Bitcoin is, looked like it was kind of topping out with possible distribution. And obviously, if the network splits, then that's not bullish at all. That would probably put a nail in the coffin for the bull trend, in my opinion, and see max chaos. So I was kind of just prepping and getting ready with my soldiers on the exchanges for that volatility and chaos. But if once segregated witness signaling is fully locked in, and if we continue on with our bounce play / relief rally, then I'm probably going to shift that ratio back and then pull off most of my BTC into Trezor. And I'm going to be very selective moving forward about altcoins. I'm not going to diversify as heavy into alts as I did at the beginning of the bull trend. And the reason being is because even though Bitcoin still hasn't reached its full bubble potential, in my opinion, based on the logarithmic scale, many altcoins definitely look like they've hit full distribution. And I wouldn't be surprised. Now, we'll have to see, test this hypothesis, but let's say we break the all-time high on Bitcoin with the V bottom. I wouldn't be surprised if we ended up getting our inverse correlation back with altcoins, and if a lot of altcoins just ended up hitting a dead cat bounce while people FOMO Bitcoin, right? Because this block size FUD has actually really added a lot of rocket fuel to altcoins, right? Like people started hedging heavy, including myself, before we broke the all-time highs. Yep. And that's when we start to see altcoins really just explode, like Ethereum and Ethereum Classic, like you name it, right? They just all exploded for months. So all last year they were inversely correlated. Even before Bitcoin broke the all-time high, they were inversely correlated. Then Bitcoin broke the all-time high. Altcoins continued to go up. Everything became highly correlated. As soon as Bitcoin corrected, altcoins just hit full distribution cycle, and it looked like their bubble popped. And so I wouldn't be surprised if we shifted the balance back into inverse correlation, but we're not going to know until we see Bitcoin breaking the all-time high. We won't know for sure. So it's just a working hypothesis, but I'm not married to my opinions. I'm flexible like water. Like I'm not the kind of trader who's going to be stubborn about my opinions and analysis and just not adapt if I happen to be wrong, right? Because I have a saying, which is, I'd rather make money than be right.
Wait a minute, Rocky. You mean you wouldn't rather just post a chart on Twitter telling everybody you know exactly where it's going, and if it doesn't happen, then you're not a trader?
Yeah, if it doesn't happen, I'm just gonna stay salty and sit on the sidelines and not adapt to the market and just like continue to hold my beliefs while the market passes me by.
Oh, wow. I think you just described like 99% of crypto people on Twitter. Anyway, good stuff, man. So I see a lot of questions coming in. I'm just trying to scan through a lot of stuff about the current market. So we'll get to that in a second. And I just want to see if there's any other kind of random basics questions that you guys have. Yeah, Dave, I was hedged into a lot of cash before that breakdown. Blood around 2,400. Marcin, Coinigy alerts. Yeah, Coinigy, I also set multiple alerts on iPhone applications, on the apps. Cool. So volume's a little bit high. Let me try to pull that back. How's that? Okay, cool. Craig, basic question: when you hedge into cash, do you mean USDT or USD? I typically do USD. What about you, Rocky?
I get that question a lot, and for me, they're like, it depends on the exchange. If I'm on Poloniex or Bittrex, then my option's USDT. If it's on any other exchange, then USD. They're both kind of the same to me. Just like any coins that you trade on an exchange, USD or USDT are just kind of IOU credits that you're trading.
Yeah.
And so for me, like a hedge is just a temporary lock of value, generally with the intent of being able to buy back in, right? So as I've done recently. So for me, whether it's USD or USDT, it all depends on the exchange. If I've got a bunch of coins on Bittrex and Poloniex, then I'll do USDT. So I've done both. But what I don't do, like when I say I'm just hedging into cash on my trading exchanges, I don't mean that I'm pulling hard profit out of the markets. Like I've already pulled out hard profit out of the markets. You know, I've pulled out about 30% of my entire crypto portfolio out of the market into my bank account. The reason for that is so that I can, no matter what happens, you know, whether I trade with flawless execution or whether I take a hit, I know that the money I pulled out of the markets is even more money than I had at the beginning of the year. So no matter what happens on this bubble, I'm going to be a winner because I locked in hard profit. Number one. Number two, you know, it helps me trade with equanimity because, you know, scared money don't make money. And number three, I know I can trade it all back. Like I don't have this mindset of scarcity when it comes to Bitcoin. Like, oh, I sold some Bitcoin, I'm never gonna. I trade it. You know, I sold like on the breakdown 2,500, I sold like another 10%, right? Of my Bitcoin holdings. And then recently off of this bounce plan, being able to buy everything back in, I was able to buy back around 6% and increase my holdings around 6%. So out of that 10 that I sold, I regained like 60% of it off of this bounce play.
Yep.
So, you know, with trading, you just keep on replenishing crypto, and that's my mindset, right? But I feel like risk management is, you know, hedging through a bit of diversification into other markets that's just not all crypto, because you never know, right? You could have some ridiculous black swan event that happens that nobody saw, and you know, you want to have some money out of the markets. And I've been telling people for months, like, if you've made life-changing amounts of money in this bubble, then you're probably wise to pull some of it out and lock it in hard value, right?
Yeah.
And listen, I'm absolute crypto head. I absolutely love crypto. I love it more than fiat. I love it more than the banks and this and that. But I'm also reasonable in managing risk, and you know, I don't want to be all in crypto. I'm not that hardcore that I'm willing to take that risk. And would I have the same mental clarity in my trading if all my bags were in crypto, right?
Yeah.
I mean, it also adds more counterparty risk to me when I'm hedging. So by siphoning some out and putting into the bank, it's also helping me reduce my counterparty risk by keeping so much crypto hedged in USD on the exchanges. So sometimes I'll pull money off of one exchange I put into my bank just to clear up space so I could put some more crypto on it and hedge some more, right?
Yep. And you don't want to be the guy or lady that turns $1 million plus in paper profits into like nothing. So like, I'm pretty sure there's at least a few people out there that were like early strat investors that never ever took profit. They just, they saw this and they thought they were going to be worth $8 billion or something within a year. But when a market goes up 20,000% in the span of a couple of months, like, that can create a life-changing amount of money for a lot of people. And like, you don't want to be the person that looks up here and goes, wow, I'm worth X million, and then you never take profit, and then finally you get super depressed and you puke out on the bottom here, right? And you give back like 80% or 90% of your profits. Like, that's why we say, like, if you guys have big trades, and obviously if you're building capital, and again, we're not financial advisors, so we're not going to ever tell you what to do with your capital, but if you're somebody who's like made a life-changing amount of money, take some profit, reinvest. Like, I mean, I can't tell you how fun it is to take some Bitcoin profits and buy gold and silver. No matter what your money political views are about that, I buy real estate, I invest in other startups. Like, there's nothing wrong with diversifying unless you're like a Bitcoin maximalist and you're willing to bet everything on Bitcoin, which I think is kind of crazy, just because, again, we can't predict the future. But yeah, man, take profit, guys.
Yeah, I was a full-on maximalist as far as my portfolio in Bitcoin for like most of 2015 and 16 when we were in accumulation and markup. And in my mind, I was like, until we break those all-time highs, previous all-time highs, and make another wave, yeah, I'm not thinking of taking anything off the table. So there's definitely a period of aggressive accumulation and trading altcoins, and obviously the more I trade and as the years go by, the more money I have. So when I was just starting off full time, I had a lot less money than I had now, so I had to really aggressively save as much BTC as I could on this run up. But once you like make 1,000% gains or whatnot, if you're not locking in some hard profit, then you know what they say about greed, right? So
yeah, absolutely. I saw a few questions about phone apps. So like the way that I do it, and Rocky, I know you're in front of your computer quite a bit, but like for me, I actually trade through the exchange websites still. It's not ideal and it's not the most efficient, but I'll use like like say Blockfolio or something like that for alerts on the phone. And then I'll just log into my account through my phone to place trades. Or obviously if I'm at the office or if I have my laptop, like it's a lot easier to trade. But I mean, I've taken trades in some of the craziest places, like literally on like wooden boats in the Philippines, or on an airplane, or in a train in Tokyo. Like I've traded in some of the craziest places and scenarios. So you just got to do what works for you.
Absolutely, Chris.
Yeah. Okay, guys. So let's do this real quick, because we are coming on right in an hour. So I want to wrap up this video and then we can answer any questions that we missed after. But basically, so let me kind of clean this up. I'll give you my quick just opinion about price action right now. So obviously we've had a really nice bounce, right? So from what was the low? The low of about, call it mid 1800s up to about 2300. So, a few $100 bounce, really, really nice. We've got this magnet here where basically anytime price goes above it, we pull back. Anytime we go below it, we pull up. So somewhere around, like, I'd call it like the 2400 mark. And you can see that's kind of mid-range here too. So one thing that I'm looking at, and it was nice that we had this support, but that doesn't mean that support has to hold. There's still a bear scenario here that could happen. So on the bearish side, obviously, if we roll over and use 2400 as resistance now, this is what this would look like long term, right? So like if, say, we put in a lower high and we weren't able to get up above this trend line, we could absolutely roll over for a lower high and go for another extension to the downside. Now, the bull scenario here is we consolidate and maybe put in like I don't know, several days of a breakout pattern squeezing up into 2400 and then give us a breakout for continuation. If that happens, this is what I would look for, is like a much longer term extension. So just to show you guys some targets, I think obviously a retest of 3,000 would be kind of the first area, and that's pretty close to the 61 extension. If we go for another 1-to-1, so if we go into leg 2 of this massive bubble, I don't think it would happen quickly. I think it would take several weeks or months for that to play out. But if that happens, you can see the 100% lines up close to that big round emotional number of 4,000. So right now it's kind of hard to tell because we're just kind of tucked into this magnet, and we do have the SegWit thing on August 1st. Rocky, I'll let you talk about that, but that's kind of the biggest unknown right now, is what's going to happen with that, and we're getting more clarity as time goes on, but that's really the biggest kind of uncertainty that we have in the market, which actually could have a long-term effect on price, which is why I'm not shouting from the mountaintops, even a midterm prediction, just because there's so much uncertainty. It's kind of a coin flip to me right now, at least where we are. Rocky?
I'm always shouting from my mountaintop.
Rocky has a permanent seat on his soapbox.
So yeah, my thoughts, I completely agree. And what's interesting with that $4,000 target is there's major confluence. Like when we broke out of the all-time high, I actually measured a fib extension from the low up to 1300 down to 166 capitulation, and it had actually lined up with that 4,000 area, a few fib levels up, right?
Yep.
If we were to make a same measured move as we did in 2013, it would actually break the extensions up into the 5,000 area, like if it went complete parabolic like that. But the markets are a lot more liquid. So in 2013, we had Willy pump bots in the liquid markets and stuff. So obviously it moved up a lot higher. But my thoughts in relation to, I think a lot of it really does line up with the fundamentals right now and segregated witness. And what's interesting is that, we've been in this 2-year block size drama, two factions kind of having different visions of how Bitcoin should scale. And it's been at a complete deadlock. And then, one side decided to do a user activated soft fork, basically loaded gun on the table, like either, start signaling for segregate witness, activate SegWit, or, users are going to soft fork and leave miners behind. And that could potentially split the network in two. So that's where there was a lot of fear, uncertainty, and doubt. Wow, look at that. Look at that candle.
Yeah, this is is a little bit less noisy looking at the 3-day.
Wow, that's quite a beautiful candle. Look at that wick. Holy smokes. I like that. Buyer stepping in. That looks really good. So basically, what ended up happening yesterday is big miners who we're coming to a deadline, a crunch time. Like if miners don't start signaling and locking in segregated witness now, then the network will split on August 1st. So it's like do or die, now or never. And then yesterday lined up beautifully with the technical bounce play. All of a sudden, miners start signaling for segregated witness, including Antpool, which is run by Jihan, he's been one of the biggest people against segregated witness, started signaling for it, right? And all of a sudden that added some rocket fuel to a technical bounce play. And if we lock in SegWit, I wouldn't be surprised to see a very strong V-bottom continuation, relief rally, and just breaking through that descending trend line. Because I honestly think that all this block size FUD has really just been pumping the brakes on the bull trend. I think Bitcoin would have probably hit higher levels much sooner if it weren't for all that FUD and uncertainty. And
Hmm.
with more clarity and knowing that the network won't split and stay unified, I think that'll be enough of an excuse for like a relief rally. And for all the people who were wanting to buy Bitcoin but sitting on the sidelines uncertain because of that, I think that would give them a green light for new money to start coming into the ecosystem.
Yeah. Well said, man. I mean, I can absolutely see that with if we snap this descending trend line and the FUD kind of dissipates. I and you said it earlier too. Like a lot of people are sitting on the sidelines just waiting to buy back in should nothing catastrophic happen, right? So,
Yeah.
and one thing that I've been thinking a lot about, and there's really no way to gauge this with any degree of accuracy, but it's I've just been thinking about the general public again, like going back to mom and pop investor, your person at the bar or the barber shop or the gym that's like, oh, you're into Bitcoin, you're into crypto, right? Like anytime that starts to happen, that obviously like signals to me a bubble. It's kind of like, I was in the real estate game back in the early to mid 2000s. And in fact, I was on the lending side. So I had a front seat to the financial crisis, and I understand how crazy things can get. And it was just whenever every single person you talk to is building a house or investing in something, that's when you're near a top, right? So I don't know how close we are to a top because this is a global phenomenon, right? It's much different than anything as far as an asset class. This is like much different than anything I've invested in prior to crypto, right? Like it's so interesting. And literally in China and India alone, they have 2 billion more people than we do. When you add them up, it's like over 2 billion people more than here in the U.S. So that alone could be a big driver of demand if those governments keep on their track of doing these things like making cash illegal and capital controls and hyperinflation and all this stuff. So it'll be interesting to see where we are, even just 3 to 6 months from now.
Absolutely. And the thing that I would like most about the network staying whole and scaling is if we scale, it means that we can handle mass adoption. And I think obviously over the long-term 8-year trend, Bitcoin's been very bullish, and it's also a lot more difficult to manipulate, than other markets where you have a lot of fractional reserve paper. Than like with gold, for example,
Yeah.
they still trade a lot of fractional reserve paper of gold that doesn't really exist, or and stocks with naked short selling. They can borrow stocks that don't exist and short the market type of thing, right? But and they're thinking of adding that kind of stuff to Bitcoin trading, but it's going to be a lot more difficult to manipulate, in my opinion.
Hmm.
And those boys on Wall Street, coming into Bitcoin and crypto this late in the game, really comes down to like, are we going to relinquish price discovery for that type of paper trading like CFDs and stuff like that, or will we actually just rely on the same typical markets that we're using? And you can basically verify the supply, right?
Hmm.
I mean, with gold and other stuff, you can't verify anything.
Yeah.
Nobody really knows how much gold or diamonds or silver there are on the planet, supply and demand. So because Bitcoin is verifiable, proven by math and cryptography, it's much more difficult to manipulate supply and play games like that, right?
Hmm.
And they're coming into our waters, right? They're coming into our jungle and our territory. So, we we control those jungles.
Yeah, definitely. And I think, options and other derivatives are definitely coming to the crypto space. I think in the short term, meaning like maybe 1 to 3 or 1 to 5 years, like I think that's going to exacerbate the volatility. I think it's going to, It's going to make the bubbles go for longer. It's going to make the crashes feel worse. And then long term, talking like a decade or two out, maybe shorter, I don't know. But, if I'm thinking long term, like obviously as the markets become more efficient, I think the volatility will fall. But again, I mean, this is unprecedented. This is new money. This is a new form of money. So you can look at the past for examples, but as the disclaimer says, past performance doesn't predict future performance. And I think that's especially true with Bitcoin because it's so new. I mean, it's a global phenomenon, and it's just a completely new asset class. So be interesting to see. All right, guys, I'm going to go ahead and turn off the recording.